Hi everyone, it's week ahead video time once more, and the moment the market has been waiting for now for a couple of weeks and bracing for recently has finally arrived, and that is the US election that takes place on November the 3rd, which is Tuesday. Now there's a few other big events as well, like the FOMC is coming up, we've got the BOE, the RBA, we've also got NFP on Friday, but all of these will play second fiddle really to the election outcome this week. Now, looking at some of the market moves we had in this past week, we saw massive risk-off flows coming into the market with equities, S&P 500 seen in yellow here moving to the downside in the week, and strong support coming into the US dollar from a safe haven point of view. And the main reason for these downside or risk-off flows has been the rise in virus cases and, of course, increased lockdown restrictions in places like Europe, but also the looming uncertainty about the election. Now, the current polls still suggest a strong probability for a Biden victory, set at about 87% right now, according to FiveThirtyEight, and that would mean about 340 electoral votes. And similarly, the polls still suggest that Democrats are expected to win both the House or Congress as well as the Senate. Now, if that is the case, why have we seen this bout of risk-off flows, apart from the virus numbers, of course? Why did we see more profit taking and de-risking going into the election? Is because the dynamics and the importance of this election means that there can be a lot of incoming uncertainty and heightened volatility depending on the outcome of this election. Now, a couple of important points to keep in mind about this one is that, remember, from an American election point of view, it's not a popularity contest, meaning that they work with that winner-takes-all system. So it all comes down to the electoral college votes and not really the popular vote, because Hillary Clinton, she won the popular vote back in 2016, but she actually lost the presidency because she didn't get enough electoral votes. And for reference, a candidate will need a majority of 270 EVs of that 538 electoral votes to win the race. Also keep in mind that the way that the virus has played on politics this year meant that it's changed the way that millions of Americans vote, and we've seen millions, tens of millions of mail-in ballots cast in 2020, and that poses massive uncertainty because different states in the US will have different rules on how and when they count these votes, and that can lead to lots of uncertainty because where we normally know who the winner is on election day, this year might not be that case. We might only know a couple of days afterwards, which again poses a lot of uncertainty. Also, the race of the presidency is one thing, but what happens to the House and Senate is probably more important right now for the market. So whether it's a Trump victory or a Biden victory, I think the market doesn't really care as long as that victor also takes the House as well as the Senate. Because if they don't, it's going to open up a lot of headaches to deal with about the expectations of future monetary, future fiscal policy and other policies like taxes, etc., if we have a split government. Also in terms of polls, which is important to keep in mind, is that yes, it shows a lead for Biden. By 2016, it also showed a clear win for Clinton and a victory over Trump, but that didn't happen because Trump won. So, the polls, it's one thing to see them. I think the market knows better as to just trust them off the cuff, and I think they've been preparing for that uncertainty going into the event. Also keep in mind that Trump has clearly voiced his doubts about the integrity of the mail-in ballot system, and if a Biden win comes down to just that, it's probably going to lead to a very contested outcome, and that's a real threat for markets as well. So looking at the week ahead, a couple of things just to keep in mind to basically make sense of how the markets might be expected to respond depending on the outcomes. Remember, it's going to come down to whether we see a strong win for either candidate as early as possible. Obviously, also what happens to the House and what happens to the Senate, and whether we said if it's a quick victory, that's going to be the best. If it's a dragged out thing that takes a couple of days and possibly even weeks, that's just going to be a nightmare to trade. Remember that when it comes to the US elections, there's always a few battleground and swing states. Now in 2020, a few of them to watch would be Arizona, Florida, Georgia, Michigan, Minnesota, North Carolina, Pennsylvania, and Wisconsin. And recent polls from a New York Times article says that Biden leads in 3 of them, namely Florida, Arizona, and Pennsylvania, and by quite a large margin right now in Wisconsin as well. Now, the reason why there's going to be a lot of focus on Tuesday on Florida specifically is because, according to the BBC, they said that the candidate who normally wins Florida has become president of the US in all elections going back to 1992. So it's an important one to watch from a bellwether point of view. And also keeping in mind that Florida has the 3rd highest number of electoral college votes. So very important state to keep in mind. And in terms of Florida and Arizona, they've already actually begun processing votes a week ago. So it's a key state to watch. We might be getting those results a lot quicker compared to places like Wisconsin and Pennsylvania, for example, that only starts counting on the election day itself. So we might see a strong win for Biden in places like Florida and Arizona, for example, and maybe even North Carolina. And that will mean the market will start to price in a Biden victory. But imagine, that you see Wisconsin and Pennsylvania numbers coming in, and that shows a very strong win, for example, for Trump. Even though that's not what the polls are suggesting, it's obviously possible based on 2016, and that also creates a lot of uncertainty to keep in mind. Another challenge to keep in mind is the possible divergence between in-person votes, which might be favoring President Trump, and mail-in ballots, which might be favoring the Democrats or Joe Biden. There is a possibility that the in-person votes can show a strong start to Trump on the day, but as the mail-in ballots are processed that day and maybe a day and a couple of days after that, that lead from the in-person votes might be eroded in favor of a Biden victory. So lots of uncertainty there as well. Now, there is some caveats to this to keep in mind. Florida, for example, their early votes that's already been counted for a couple of weeks ago, whether it's the in-person ones or the mail-in ballots, they will be reported first. And since the way that people vote has been so politicized in this election, there's a good chance that the early votes in places like Florida might favor Joe Biden once again. But, there's that uncertainty as well that as the votes start to come in, the in-person votes on the day, on the election day, that might start to show more support for Trump. So again, uncertainty. Below is a handy graph from a BBC article showing the expected times for poll closures in these key battleground states. And do keep in mind that, for places like Pennsylvania, Arizona, Wisconsin, Michigan, the results are most likely going to be delayed due to mail-in voting. So just keep that in mind. Now, all of this means that it's going to be quite the nightmare, guys, to trade this event, especially if there's no clear answer as soon as possible. And, one thing to keep in mind about these types of events is that, yes, they can create fantastic trading opportunities with big market moves, but at the same time, they can also create so much unexpected volatility in the market. Look at the swings we had back in 2016 with that surprise. So, if you play this thing wrong, it can be very detrimental to your capital as well as your trading psychology. So if you're a trader, especially a beginner one, if you're not comfortable in trading risk events like this yet, if you're not really experienced with this, strongly consider maybe staying on the sidelines until you see a clear opportunity arise, because these events can be very volatile and very dangerous if you don't know what you're doing. So looking at a couple of possible sentiment shifts and a possible trade plan for the week ahead, the scenario one would be a clear victory for Joe Biden and a blue sweep. So this scenario would see a clear and strong win for Joe Biden being called on the election night itself, especially in those key battleground states like Florida, Arizona, North Carolina, and Pennsylvania, Wisconsin as well, showing an obvious Biden win, but also more importantly showing a Democratic House and Senate victory as well. Now, in this scenario, we would expect to see a couple of things. Firstly, appreciation for US as well as European equities, with that uncertainty being diminished, as well as the expectations of sizable fiscal stimulus being passed. Secondly, we would expect downside for the US dollar across the board, especially against those cyclicals like the Aussie and the Kiwi, and emerging market currencies like the Chinese yuan as well as the Mexican peso. Thirdly, we would expect upside for hard assets with that expectation of incoming stimulus, upside for hard assets like gold and silver, and fourthly, downside for US treasuries. Scenario 2, a clear victory for Trump or a red wave. Now, the exact opposite as scenario 1, but just in favor for Trump. So that'll see a strong, clear win for Trump being called on election day in those key battleground states like Florida, Arizona, North Carolina, etc. And more importantly, showing, like we said, a Republican House and a Republican Senate. Now, remember that, this is not currently the expectations that the market has about the election. So the reaction from a surprise sweeping victory by Trump will arguably cause much bigger moves in the markets when just compared to a Biden blue sweep victory. So do keep that in mind. Now, in that scenario, we would expect to see one, appreciation for US equities as it's basically status quo. That just continues, and the possibility of favorable regulation as well as taxes. And it's possibly going to see some downside for EU equities due to the increased potential for a possible EU-US trade war from a second term from Trump. Secondly, we would expect that to see US dollar upside across the board, as expectations for more protectionist policy should boost dollar attractiveness. And number three, we would expect that to see upside for hard assets also, like gold and silver. And then fourthly, expecting upside in something like US treasuries. Now, scenario three would be the biggest headache really for markets from a trading point of view. That'll see no clear victor with a possible delay in the outcome, maybe even a possible contested outcome, or a clear presidential victory, but we have a split government. Now, the one thing, guys, that the market doesn't like, of course, is uncertainty. And if we see very marginal wins, on the election night, so let's say we see a 51-49 win in some states type of thing. If we see that, and we know there's still lots of incoming mail-in ballots to come in, if we see only a small margin of victory for either candidate, the market will basically be fixated on all those small changes as the result starts to roll in on the day. And that can just be a continuous tipping of the scale to favor one candidate over another. That's going to be a nightmare to trade. Also, one to keep in mind is if we see a smaller win that favors Biden, but it only comes down to, like we said, the mail-in ballots, then that's going to see Trump basically challenge the outcome. We're going to see a contested outcome, and that means that it's going to be dragged to the Supreme Court for a battle to determine the winner, and that'll be a big risk to risk assets as well. And apart from that, the biggest headache is just going to be, let's say we have a clear small presidential victory for either Trump or Biden, but we see a gridlock or a split government. And that's going to be the most frustrating thing to manage from a risk management point of view. And what that would look like is a Biden win, but we have Republicans keeping the Senate and taking the House, or it will be a Trump victory, but Democrats keep the House and they'll also take the Senate. This outcome means, future policies for either one of the administrations will just be a constant uphill battle, and that will create a lot of uncertainty as well. Now, the trade plan in that example would be possibly downside for risk assets like US and EU equities across the board due to the uncertainty. Number two, probably going to see some upside for the US dollar across the board as the uncertainty and that possible elevated volatility will result in further support for the safe havens. And given how markets have been pricing in a blue wave victory, it's probably going to favor more the dollar compared to something like the Japanese yen. Now, guys, one thing that's also important to add on here is that even though, these are the expected outcomes in each of these scenarios, do keep in mind that the market has been very underinvested since COVID came on the scene. And with that thinner liquidity and the lower volume we've seen recently, the possibility of elevated uncertainty means things can go either direction this week and possibly in the weeks to come. So please do keep your downside protected at all times. And if you are a complete beginner at trading events like this, there's nothing wrong with staying on the sidelines and just observing this for now. Remember that the election, it's certainly important for how the markets will be trading from now on and probably until the end of the year. But either outcome this week will unlikely be enough to really change the overall direction for something like risk assets. Especially if we see the focus turning to vaccines going into 2021. So just because you might miss out on an event or a tradable opportunity this week by staying on the sidelines doesn't mean that you're going to miss out on big moves completely. There's still lots of expected moves going into 2021 if we see those vaccines, if the market does see global economic recovery alongside lower interest rates, alongside incoming stimulus, alongside QE support, etc. It means the bigger picture views are still fairly in line. Doesn't matter which candidate really wins. So in a way, this event will be more important for the year and the now, but it's unlikely to really change the overall expectations of where key asset classes are going. Maybe a little bit different comparing to the dollar, but just looking at risk assets, etc., it shouldn't really be enough to change it. Depending on the outcome, it's probably only going to accelerate or decelerate the pace of how the expected trends develop, but the trends from a bigger picture point of view should still be intact, whether we see a Biden or a Trump victory. So just do keep that in mind for the week ahead as well.